Yeah, the links changes, bro. So it later, so I want to my status is. Right, I think I'm okay now. Yeah. Yeah. This one is meant to take a jacket off. It's gonna be hell of a nice. Okay. Because I don't want to hear it. Let me do this. Let me do this. Hello guys, we are just going live now. We're gonna be live now. We're gonna start our session. I'm just checking few of my things here, so we will be online soon. All right, so I'm not going to wait for people to join. I will just continue with the live. Let me see. Everything is Pashasha here. Right, things are on, systems are on now. Right guys, today I will be offering a session, a free session about the stock valuation for accounting in grade 12. So the way I'm teaching accounting, I'm teaching it very differently. I start with the concept, because I believe that if accounting without concept is not going to sound well, if we run to the calculations and then try to do calculations of what we don't understand. That is why many learners fail to understand accounting, because the first thing that we need to know are the concepts. Okay, so I just want to run off what is it that we're gonna deal with today. Okay, so today we're going to focus on the inventory valuation. Okay, we are dealing with the inventory valuation. Okay, so in accounting, when we talk about the inventory, we talk about the trading stock. Okay, that's what I can say. We talk about the trading stock. So here we're going to see how we value our stock. So there are two systems that businesses can choose to use. So I'm not going to go deep in these two concepts, but I will just try to highlight important information about these two systems. So the first system that the business can use is the perpetual system. Is the perpetual stock system. Because if we can go inside here without understanding what are these systems, that is why I said we have to know the concepts before we go deep into calculations. All right, so the first stock that we talk about here, we talk about the perpetual stock system. So what is the word perpetual? What does the word perpetual means? Before we can talk about the stock, because already we know what is a stock, already we know what is a system, but what does this word perpetual tells us? Okay, so the word perpetual means repeated, so I can just put it in that way. Perpetual means repeated. It means repeated. Okay, so it means that this kind of the stock system, it means that things are being calculated repeatedly. So I want to give an example, because I'm not going to go deep inside here. I want to give an example with Pick and Pay. All right, Pick and Pay uses the perpetual stock system. Why do I say that? Is because they repeatedly calculate the cost of sales. They also calculate the value of the stock immediately when items are being sold. Why am I saying that again? Is because Pick and Pay uses the computerized till, and they also uses what? The scan, meaning that their items have barcodes. Immediately they scan that barcode at the till. It tells from the storeroom that this item is going out, meaning that the stock is recorded in the computer. So immediately we scan that the item is going out, the cost of sales can be calculated, because the computer now will know that how many tin of fish have went out. So those tins that have went out, how much is the total cost price of those tin fish? That is the perpetual stock system. Okay, so in order for a business to use a perpetual stock system, they must have a computerized till. Meaning that if you want to ask someone, which system does a spaza shop use? They cannot afford to use the perpetual, because the perpetual need a business to have a computerized till and scan, so that when the item goes out, they can be scanned. When the items are coming in, they can also be scanned. All right. So that is all about the perpetual stock system. That's all I can say about it. Then let's talk about the second stock system that we have. We have the periodic stock system. We have the periodic stock system. Okay, like what we did with the perpetual, we can we know what does the stock mean, we know what the system is. So what does the word in accounting mean? The word periodic means occasional. Occasional. Remember, in the perpetual, the cost of sale, remember what is important of our stock. We must always know our cost of sales so that we can calculate the profit. We must also know our total sales so that we know our profit. We must also know the value of the stock that is remaining in our business. Okay, so in the perpetual, that is done rapidly, meaning that every time when the item is sold, there is a new cost of sales that is calculated. When the stock is sold, there is a new sales that is calculated. All right. So when we talk about the periodic now, it means that those closing stock and the cost of sales and the value of the closing stock, it means now they are only calculated occasionally, it means that when required, let's say we want to prepare the income statement, that is when now we are going to take our books where we're recording when the stock is going out and when the stock was coming in. So we are going to take that book and calculate our cost of sales so that we can prepare our income statement. All right. Now, that is the difference between the perpetual and the periodic. And then to emphasize one thing about the perpetual, is that those barcodes that are on the items for the business, they contain the following information. The barcode, it has the cost price of the item, it has the selling price of the item, it has the details of the product, it also has the detail of the supplier, so that whenever that is scanned on the till, the information can run and tell us, okay, this person is buying the tin fish, the cost price of this tin fish was this, and then the selling price was this. All right. So now we can move into how to value our trading stock. That is our main purpose. So this was the introduction on which system that we need to, the systems that the business can use. Okay, so these are just the systems. They are not method on valuing our stock. Okay, so fast forward now, we're gonna look at the method that we're going to use to value our stock. Okay, so when we value our stocks, we use 3 methods, no any other method. I'm talking about grade 12. Going forward there, when you're no longer doing metric, you are done with metric, now you want to follow commerce stuff, you want to do BCom accounting, you will see other methods of valuing the stock. Okay, but here in grade 12, we focus mainly on 3 methods that we're going to use to value our stock. Okay, 3 method used to value the stock. Okay, right. Those methods that I'm talking about here, number 1, we talk about what we call a specific identification method. All right, number one, let me write it here. Specific identification method. So we can use the abbreviation SIM for that. Okay, so I just want to talk about the specific identification and then calculate, see how the specific identification works. How do we calculate cost of sales? Remember, here when we value our stock, there are three things that are very important. Like I was saying when I was talking about the perpetual and the periodic system, the most important items here to focus on, it is how to calculate the cost of sale using a certain method, to see how we calculate the sales using a certain method, to see how we calculate the gross profit. But the gross profit doesn't change. It's always sales minus cost of sales. So the difference here is the cost of sales. In all the method that we're gonna go through, in all these three methods, the difference here is only in the cost of sales. Okay, so our first method here, we're going to look at the specific identification. So in the specific identification method, what I like in accounting, like I was saying when I started here, I like to start with the theory first. Okay, so we need to understand what is this specific ID and what is happening in the specific identification. All right, so specific identification, it is the most simplest method of valuing a stock, because each item in the specific identification method, it is given its own cost price. And this method, on which type of goods do we use a specific identification method on? We use the specific identification method on the large commodities. The large commodities here, we can talk about the vehicles, we can talk about machinery, because those are large commodities. And I want to give you an example. Why do we use it on the large commodities? When you go to a car dealership, you don't, they won't tell you that you have to buy this car because this car have been on the floor for the longest time, so this car is the one that must go first. No, when you go to the dealership, you can easily pick that I want that car, then you will get that car. So that is why we say each and every item, it is assigned its own cost price. Okay, so I just want to give you a little bit information under specific identification so that we can move forward. Okay, right, I just want to give you some things here. It says so like I was saying, this is the simplest form of stock validation, where every item is assigned a specific cost price. Okay, Then another statement here, what can we say? We can say this system is relevant when large commodities are sold. I mean on large commodities. How is my life? What is happening here? So make sure that everything goes in order here. Right. So I was just writing here what is it that we have to expect. Remember, accounting is not only about calculations. We must also know the content. So if you want to pass accounting, it's not about knowing the calculation. It is knowing the concept. Because someone can come, know how to calculate, but now when we go to the theory part, someone just fails. You understand? It means that it proves that that person doesn't know accounting. You understand? So I take accounting, calculations, and theory, I put them together. You will see that now you know what you are writing, you know what you are calculating. Okay? So this system of the specific identification is relevant when large commodities are sold. Like for example, I gave you an example with the vehicles that when you go to a car dealership, you'll have its own, each car have their own cost price. Okay? So I want to quickly run to the example on how to calculate the value of closing stock and the cost of sales using the specific identification method. Okay? Right. I'll just leave this one. It's talking about this perpetual and the periodic. I will come here. Oh, specific, it was supposed to be written here, but it's fine. So this is the example that we are going to use to calculate the value of closing stock. I mean the number of units unsold, value of unsold units, cost of sales, and the gross profit. So I just want to check if this is visible enough. Okay. So I think now is better. Right, we can continue. Right, you are provided with the information relating to Kima appliances. The following stock appeared on their stock cards. Study the template of the number of stock bought at purchase price and the selling price of all the stocks sold. Okay, so the information, the items below were in stock and some sold January to December 2014. Now when you look here, this business has 3 items. It have LG, it have Samsung, it also have Bosch. Okay, so what is happening here? We have the opening stock, we have the purchases. So when you go to the LG, we can see that we have two number of units on the opening, and then we bought 3 items. So if you look at the cost price are differing. Okay, so at the beginning 1 unit was 1,000, so the total cost was 2,000. So the stock that we bought in April, there were 3 units. 1 unit was at 1,200, meaning that the value of those units that we bought during the year, it was 3,600. That is all about LG. So you see what happens in accounting. Don't rush to the questions. Analyze your information. Understand. If you understand the information that you are presented with, then it's going to be simple for you to answer the questions that you were asked, because you have analyzed your information, you understand your information. That is the first thing. You see, my information, my questions are even down there. I don't want to know about them before I understand the given information. Okay, we move on. Samsung, at the beginning, they had 3 items. Then during the year, they bought 2 items. Out of these 3 items, 1 item here was 2,000. Hence, we have a total of 6,000. These items that we bought during the year, 1 item was 2,100. Hence, we have a total of 4,200. Okay? Then we go to Bosch. Bosch has 4 items at the beginning. Each item was 3,000. Hence, we have a total of 12,000. We bought 2 items during the year. Each item was 3,300. Then hence we have a total of 6,600. Meaning that these items, how many items do we have? We have 5 here, LG, 5 Samsung, and we have 6 Bosch. Meaning that we have 16 items available to be sold. That's our information. That's what I have analyzed. You understand? So before we go to the questions, I'm not interested in the questions. I'm interested in understanding the given information. All right? So meaning that the stock that we have, that stock has a value of 34,400. That include the stock at the beginning of the year, meaning that when we were opening our books, we had the stock of 20,000. Therefore, we increased our stock with a stock that has a value of 14,400. Let's move on. We go to the bottom of this table. Now, this table now talks about the selling price. We can see the cost price, we can see the selling price, okay? Good. Now, look at this. Sales. Meaning that now, when we look at this now, we're going to look at opening and during the year. Meaning that these are the sales for the opening items. Okay? And then this one is for the ones that we bought during the year. Okay? So, let's look at LG. LG at the opening, we had 2 items. We sold 1 item. Meaning that we still have 1 item left that we did not sell. Alright? Then the ones that we bought during the year, there were 3. But we sold how many? 2. We are left with 1. We are just analyzing the information that is given. But now, here is a cash. I don't know if I can say a cash or what, but here is a trick. Look at the selling price. This selling price is not for one item. Why am I saying that? When you look at the selling price, they have mentioned that, okay, let me go up here. They say 2 items at, it means that one item was 1,000. But when you come here at the selling price, it means that the selling price for one item is 2,000. And when you come here, the selling price for 2 items, it was 4,800. In that order. Okay. I wish I was connected to some people so that I can be asking question or of what I'm busy talking about here. Okay, but it's fine. It's fine. Let me move on. Right. Samsung, we have 3 items that we have sold, but those items that we sold, we bought them cost price. We bought them each at 2,000. Now when we are selling, we have sold 3 items for 12,000. We go to Bodge. Out of 4 items, we sold 3. But the selling price for these 3 items, it was 18,000. Then for these 2 that we bought during the year, we sold 1. That means we are left with 1. One item here was cost, we have sold it for 6,600. So the value, look at this. The value of total sales for whatever items that we have sold is 43,400. So if we can get an idea of how many items did we sell, we can say we have sold 3, we have sold 3, we have sold 4. So how many items have we sold? We have sold 10 items. How many items did we have? We have 16 items. You see, what have I done? I have analyzed the information. Now I can go to answering the questions. I can go answer the questions because I understand the information that is presented. Okay? Right. The first question, number 1. Make use of the specific identification method to calculate number of units, number of unsold units. Now we need to know how many units were unsold. Okay, we need to know how many units were unsold. And when we go back to our table, what you have analyzed, you have said you have 16 items available. You have sold 10 items. So how many units are unsold? 16 minus 10. We have 6 items that are unsold. Simple as that. Okay? You analyze the information given. You analyze the information that you are given. Right. Number 2. I don't know how I'm going to do this because, okay, I will just do it here and then after that I will remove them. Okay. The value of unsold unit. Okay. Now we need to go now and calculate the value of the units that were not sold. Okay. Now remember here on the table we have the cost price, we have the selling price. So now which price are we going to calculate to get the value of those units? Do we use the selling price? Do we use the cost price? Let's differentiate between the cost price and the selling price. Now, when we need the value of the stock, we must not talk about the profit. Okay? The value represents how much we have spent buying that item. That is the value of the item. I want to give you an example. Let's say now you are to sell your phone. What is the value of that phone? It is what have cost you. We're not going to talk about the profit that you're going to make out of that phone when you're going to sell it. It is not the value. It is going to be the income. You understand? So when we need that, we need the value of these units. We are going to look at the cost price. How much it have costed us when we were buying those items that we did not sell. That is the value of the closing stock. Remember, the closing stock is the stock that you did not sell by the end of the financial year. Okay? Now we go to LG. When you look at LG, there are two types of stock there. There is a stock at the beginning, there is a stock during the year. The stock at the beginning of the year, there were two items. You sold one item, meaning that in LG, let me start with LG. In LG, from the opening, you have one item that was not sold. So how much was the cost price? The cost price was 1,000. Okay? Then we go to these three items. Did we sell these three items? No. We sold two of them. How many items are left now? We are left with one item. So how much did it cost us to buy this item that we did not sell? It have costed us 1,200. Okay, so the value of these items is 1,000 and 1,200. But remember, our answer here says there are 6 units that are not sold. So far, we have seen the 2 items that were not sold. Then we leave LG. We are done with LG. Then we can go to Samsung. I'll just use letter S. In Samsung, we had 3 items from the opening, and those 3 items were sold. We cannot count them as unsold units. Okay? But look at the 2 units that we have bought during the year. How many units? There are 2. Did we sell them? No, we did not sell them. So how much was the cost price of these 2 units? It was 2,100. So we multiply by 2,100. So how much is this one? It's 4,200. 4,200. Okay, then we go to Bosch. I'll use letter B. Bosch. When you look at Bosch, we had 4 items. Then out of these 4 items, we sold 3 items, meaning that we were left with 1 item. So what was the cost price? So the cost price for this item, it was 3,000. It was 3,000, okay? So the value here is 3,000. 1 multiplied by 3,000, that is 3,000. Then we go to these 2 items. We had 2 items at the beginning, during the year, but we only sold 1 item. So how many items are we left with then? We are left with 1 item. Therefore, we multiply by they are 1 by. What is the cost price? The cost price was 3,000. How do I write this 3? It's like they are doubled. So is 3,000. Okay, something is not responding here. Okay, let me wait for it. Okay, we are back. 3,300. And that gives us 3,300. So if we add, we can see that we have 1 plus 1 2 plus 2, that is 4, plus 1 5 plus 1, that is 6. So we have all the total number of units that were not sold. So now we can add up everything here so that we can get the value of units that were not sold. So it's gonna be 1000 plus 1200 plus 4200 plus 3000 plus 3300, and that gives us 12,700. Okay, right, that was how to calculate the value of unsold units. Now we're going to calculate the cost of sales. Let me remove this information. Let me give it some time so that if someone wants to write, I can give them a few minutes to copy it down. Right, let's continue. Now what I'm going to do now, I'm just going to remove this so that I want us now, when we answer these questions, we are able to see the information above there on the table. Okay, I will be ending this live after the FIFO method because there's load shedding and I don't want to be distracted when I'm busy explaining. If I finish explaining the FIFO, I will end this live. Right. Right, we go to number 3 now. We want to calculate the cost of sales. Okay, so the cost of sales, now we need to know the cost price of the units that we sold. Okay, we are no longer calculating the value of the stock that we have at the business, in the business. We need to know the value of the stock that we have sold. And if we need to know the value, still we are not going to talk about the selling price. We still talk about the cost price. Okay, so we start with LG again. How many items did we sell in LG? In LG, out of 2 units, we sold 1. So this item, what was the cost price of this item? The cost price was 1,000. It will feel like we are repeating the same things, but it is not. So out of these 3 units, how many units were sold? We sold 2 units. And in those 2 units, what was their cost price? Their cost price is 1,200. Then we go to Samsung. Okay, in Samsung, out of 3, we sold 3. We did not sell the stock that we bought during the year. So what was the cost price of these 3 items? It was 2,000 each. Okay, then we go to Bosch. In Bosch, we had 4 items at the beginning. we sold 3 items. So what was the cost price of these 3 items? The cost price was 3,000. Okay, then we also bought 2 items, but out of those 2 items we only sold 1 item. So what was the cost price of this item? It was 3,300. Okay, so for LG here we have 1,000, the total now. 2 multiplied by 1,200, that is 2,400. And then Samsung, 3 multiplied by 2,000, that is 6,000. 3 multiplied by 3,000, that is 9,000. 1 multiplied by 3,300, that is 3,300. Okay, now we are going to add them together to see how much we get. Okay, 1,000 plus 2,004 plus 6,000 plus 9,000 plus 3,300, and then I'm getting a total of 21,700. Okay, so that was the cost of sales. Okay, then still, when we are still here, we can do number 4 to calculate the gross profit. So how do we calculate the gross profit? This one doesn't change. Gross profit is equals to sales minus cost of sales. Cost of sales. So when we check on the table, the value of the sales there, it is 43,400 minus our cost of sales is 21,700. Okay, so even if you add this, you must still get 10 items, because it's going to be 1 plus 2, that is 3, 3 plus 3, that is 6, 6 plus 3, 9, 9 plus 1, that is 10. So that is 10 units that were sold. Okay, then that is all about the specific identification. Okay, let me see how much is our gross profit. That is 43,400 minus 21,700. That is 21,700. Okay, then I want us to quickly move to the next method. So after this next method, I'm going to end this live because I'm gonna have a load shedding soon. Right, the next method that we are going to slide in now, let me check if I'm okay. I'm not on that. We are going to look at the FIFO method. We're going to look at the FIFO method. Okay, that is number 2. Our second method is FIFO method. So what does the FIFO mean? FIFO means first in, first out. So this method means that the stock that you bought first, it must be the stock that you're going to sell first. Okay, so this method, it is mainly used on the items that have a limited shelf life. For example, I want to talk about milk. I can talk about bread. I can talk about tin fish. Those items, they have a limited time on the shelf, because who will buy them after their expiry date? No one is going to buy them. So as soon as you buy them, they must be the first item to be sold. You understand? So meaning that the stock that if, okay, we start a business today. What is the date today? Today is the 11th, is it? Yeah, 11th. So the stock that we are going to purchase today, it will be the first stock that must be sold. And if tomorrow we buy more stock, it means that that stock will be sold after the first stock have been sold out. Okay, right, let's quickly run into the I just want to give you some bit of a theory here, okay, so that we can move to the calculations. Okay, businesses that sell hello. Yeah, I'm fine. Yes, cool. I'm busy with my sessions. Call me after 9:30. Sharp. Why is this one not going to live anymore? What is happening? This one is fine. It is streaming. The problem is here. But this is live. It's aligning with this one. Why is this one failing to? Let me refresh it perhaps. Okay, so just see it. What is happening? Okay. It have cut my stream after 1 hour. Oh, this is on. So the A or it right. Okay. Then we continue. We continue. Right. So the method that we're going to look at now is the FIFO method. Okay. So with the FIFO method, I say the business that I was still explaining here how it goes. Okay. Let me check something here so that my thing here. Okay. Right. Yeah, we are still on. Right. With the FIFO method now, I was still explaining that I'm gonna give you some more information about the FIFO. What does the FIFO mean, and then how it works. Okay. The business that sells goods which have limited shelf life. So, for example, here we can talk about milk. Milk have a limited time on the shelf because you sell it after that time. No one is going. You put it on the shelf after its lifetime. No one is going to sell. It's going to buy because the milk have expired. Okay. I want to tell you about the cell phone. You know, cell phone, they use the FIFO method. I want to give you an example. You go to Vodacom shop. The phones that they're going to display there, those are the phones that have came in lastly. Because should they put new phones in front, everyone is going to buy the new phones that are in fashion. You understand? So their best way to sell those phones, it is to put the old phones that came in first in front. Okay, because should 5 years pass and they still have 3310 there, who is going to buy it? Okay, so as much as the phones are being updated yearly, so they also do what? The stock that they have, they put it in front because so that people can see them. And then the ones that are new, they're going to put them at the back. Okay. Often prefers to use this method, this system. Okay, we can say this system or this method. All right, now we go to number 2. Again, another explanation. By half past I want to switch off this live. This means that the oldest stock is sold first, and that the stock left the stock left at the end, the stock left at the end will always be the last, be the most recently bought stock. Okay, that is it. So I just want to quickly move to our example now. Okay, here is our example. I don't know why is this example like that. Is it my eyes or what is happening? Because me and my eyes have a problem. We don't know who is fooling who. Right, let me try to push it up so that we're gonna do the calculations down here. Okay, even the required, I'm going to push it down. Okay. Here is our information. When you look at our information, remember I said I don't care about this. This I will come to it after I have understood the information here. So the information given, they say sales units. We have sold 2,720 units. Each unit we sold it at 21 rand 20 cent. Then the total amount that we have made on sales is 57,664. That's the information you need to understand. Okay? Now, opening stock, we had 320 units. Each unit was 9 rand. The value of that of 320 units was 2,808. Then we have made 3 purchases. We've bought stock on April, bought stock on October, we bought stock in January. So the stock that we bought in April, we bought 1,100 units. In October, we bought 2,500 units. In January, we bought 1,200 units. So this is at the unit price. This is the value of those units. Now, what is important here is that we have bought 4,800 units. Now, at the end of the year, we are left with 2,400. How can we calculate this? Let me show you quickly. At the beginning, we had 320 units available for sales, and then we had from this 320 we bought more stock. That how many units we bought? 4,800 units. So if you add the two, 320 plus 4,800, that gives us 5,120, meaning that we have 5,120 units available for sales. Now, how many units have we sold? We have sold 2,720 units. So how many units are we left with? We are left with 2,400 units. Those are the units that we are left with. Okay? Right. Now we can go to the questions. They say calculate the value of closing stock. I'm going to hide that so that I can have enough space to do calculations. Let me remove this because I just explained it this way. I'm going to remove it. I'm going to remove this. So remember FIFO method, it says the stock that came in first, it must be the first stock to go out. So when we check, we have 2,400 stock that we did not sell. So we don't know that stock, where does it belong here? Is it in here? Is it in here? Is it in here? Is it in here? We are not sure. But I will tell you, and then you will be sure of where the stock is coming from. Let me take you up here. I want to show you something. In the FIFO, they say business that sell goods which have limited shelf life, e.g. milk and stuff. They say this means that the oldest stock is sold first, and that stock left at the end will always be the most recently bought stock. Okay, so if we check from our table, which stock is the most recently bought stock? Is it April, October, or January? That is January. January, it is our most recently bought stock, meaning that that stock was not sold, because when we sell the old stock, and our old stock will start here. This will be our first stock, second, third, and fourth. So this is the stock that we bought most recently. So meaning that out of this 2,400, we know that the 1,200 stock was not sold, because this was the last stock that we bought. Okay, so how much was the unit price here? The unit price was 13 rand 30 cent. So the value of that stock was 15,960. But listen to this. The stock that was not sold is 2,400. But then here we only have 1,200. Our goal is to reach 2,400. Meaning that we have cancelled what? January. We know that all of this stock is not sold. Okay? Now, which stock should we target now? Should we target April? Should we target the opening? No, we must target October. But in October, we can see that the stock that we bought is 2,500. Remember, we cannot sell the stock in the one that we bought in October before we are selling the stock that was there at the beginning of the year. We must sell the one that was there at the beginning of the year. All right. So what are we going to do? We check. We're going to say 2,400 minus 1,200. Why do we minus this 1,200? Already we know we can account for this stock, that this stock was not sold. So what other stock was not sold? The other stock that was not sold, it was also 1,200. 1,200. So where will this 1,200 comes from? We are going to take this 1,200 from the stock that we bought in October. So how much was the unit price? The unit price was 12 rand 42 cent. So we're gonna say 1,200 multiply by 12 rand 42 cent, and then that gives me 14,904. So the value of the stock that was not sold is going to be 30,864. But listen to this. 2,500, 1,200 was not sold, meaning that 1,300 was sold. This stock, now it is divided in two pieces. The other stock was sold, the other stock was not sold. Okay, let's move to the next question. Right. We go to the next question. The next question says, calculate the cost of sales. Okay. Now we need to know the cost of the stock that we have sold. I will quickly do it here. We need to know the cost of the stock that we have sold. Now, the bottom line is here. How many units were sold? We have 2,720 units that were sold. What does the FIFO says? The FIFO says the first stock that came in must be the first stock to be sold. The first stock, the very first stock that we are going to sell first is the stock of 320. What was the cost price? Per unit, it was 9 rand. So the value of that stock was already calculated 2,808. Then we come to the second stock. We can see that this 320 is not 2,720. So that means also 1,100, they were all sold. What was the cost price? The cost price was 10 rand 50 cent. So the value of this stock was 11,550. Okay? And then now we come to October. We can see that we have sold this, we have sold this. Now we come to this 2,500. And remember our goal. Our goal is to reach the number of 2,720, which is the number of stock that was sold. So we have sold 320 plus 1,100. So already we have sold 1,420. If we go to October, it has 2,500 units. So if we add 2,500, we're going to get that we have sold 3,920, which is a lie. You understand? So meaning that in October there are two things that have happened. One stock was sold, one stock was not sold. And then when we were doing the closing stock, we have seen that 1,200 was not sold. So we're left with 1,300. So if we say 1,300 at a value of 12 rand 42 cent, let's see how much we get. I will show you something after that. 1,300 multiplied by 12,42. And how much do we get? We get 16,146. And what is the value here? I just want to do the value so that I'm gonna go back to something very quickly. Plus 16,146, and that gives us the value of 30,576. Okay, so look at this. If you add these three amounts, you must get 2,720. And did you see in October 1,200 was not sold, meaning that the remaining stock was sold. So we are left, if we add this 320 plus 1,100 plus 1,300, we get 2,720. Okay, then the last question, we must calculate the gross profit. How do we calculate the gross profit? Sales minus cost of sales. And then our sales now, our sales is here, is given 57,664 minus the cost of sales of, this is our cost of sales, 30,576. 57,664 minus 30,576, and that will give us the profit of 27,088. That is where I'm gonna end my lesson for today. So my message to you guys is that if you want to subscribe, if you want more information, please make sure that you subscribe to this channel so that you will always be updated on when I'm going live. So I will be doing more lives. If you are particularly doing mass lit and accounting, I will be doing more mass lit and accounting so that you prepare nicely for your exams. And then if you also need a private mentorship, make sure that you get in touch, you get my contact, and then you're going to get a private mentorship. In the private mentorship, what am I doing there? We are treating previous question papers. I have selected many previous question papers that we are dealing with, that we are treating. We are busy with them currently as I'm talking. I have my own learners that I'm busy with them. We treat previous question papers, and if I can tell you, their term 1 result, they are so good. They are so good. I'm telling you, they are all getting distinctions. So make sure that you pull through, You get my contact, you get my WhatsApp business, and then I will tell you what is going on in my previous mentorship. I will tell you how much I charge. So we are working very nicely there. I'm telling you, and I'm guaranteeing you that should you come join my private mentorship, you are going to get distinctions. Okay, good luck for today. That was all I got for you for today. So have a good night. Right, let me end it. How do I end? I'm ending it here. Stop streaming. And stop recording.